Welcome to MacroHive Conversations with Bilal Hafiz. MacroHive helps educate investors and provide investment insights for all markets from crypto to equities to bonds. For our latest views, visit macrohive.com.
So welcome, Ken. It's fantastic to have you on the podcast. And thanks for coming in person as well.
No, it's really fun to be here. Thank you for having me. I appreciate it.
Great. Now, before we go into our sort of deeper conversation, I do like to ask my guests something about their origin story. So what did you study at university, and was it inevitable you would end up in academia and then policy at various points?
Oh, goodness. I mean, first of all, I wandered my way into university. I wasn't planning on going to university. I was a professional chess player. I barely went to high school the last couple of years. I lived a little bit in London, a little bit in Spain, and a lot in the former Yugoslavia, which was, a big chess center. And I sort of decided on a lark almost to go to college, applied to a few places. So I wasn't planning. And originally, actually, I wanted to be a Russian studies major. And that was actually one of my joint majors. I, obviously living in Yugoslavia, learned Russian, actually. By the way, when you go up to people there, you don't speak in Russian. They hated the Russians beyond imagination. I spoke in English, and I don't understand it. And then I'd switch to Russian, which they had to learn back then. My Russian wasn't great, but workable. So I was fascinated by Russia. Yugoslavia was number 2 at chess, and Russia was number 1. I couldn't travel in Russia at the time because they were very concerned about Fischer, who was the top American player. I was a rising star, but I was not Fischer. But they didn't want to invite Fischer because he was so popular. And they didn't want to have this American that everybody was fawning over. The regime was very controlling, especially in chess, where they were dominant. So I lived in Yugoslavia, but I was fascinated by Russia. And I got there and start doing that. And I had a friend who knew he wanted to be an economist since he was like 10 years old. I don't know. There are people like that. It's hard to believe. I have amazing students who are like that. And he kind of pulled me into economics, just said, take it, it's fun. And I didn't know what I was doing. I will be honest, I struggled my first year in university. I was admitted to Yale because I was interesting. They do that. We do that at Harvard. If you're really good at something, and I was really good at chess, they'll take you. But I didn't know. I didn't know how to write. I could barely pass my English courses, and et cetera, et cetera. These economics is easy. Just take it. It'll be fun. And so I sort of started taking economics courses, and a couple of our friends did. And I drifted into Russian economics. And there were a couple.
What period was this?
Good question. I'm not a young man. We're talking the early 70s. I graduated college in 75. And, it's kind of interesting. I go into it a little bit in my book, because at the time, it's so hard for someone your age to get their head wrapped around. Everyone thought Russia was like catching up with the United States. And I'm not talking about, a few people. Paul Samuelson, the giant, along maybe with Milton Friedman of the post-World War II period, he had in his textbook that we read in our first year class, the Soviet Union's growing faster. It's going to continue growing faster. It will catch up within, I think he had 10 years, outside 15 years. And he wasn't allowed. That was a common view in the White House and the CIA. And I would take these courses where the object was to show that even though it seems like the Russian system shouldn't work, it seems like central planning's stupid, it's brilliant, it works. And it's sort of funny. There are many things in economics like this. Did you study economics?
I did, yeah.
So you were exposed to it some, where you get a lot of points for showing that something is stupid is smart.
Yeah.
I don't know if anybody's going to do that with Trump's tariffs, by the way, but we'll come back to that. And so my professors had these papers about how it works. And, so that the people were working on it. And I was like, I lived in Yugoslavia for a long time, and I had chess player friends who lived somewhat privileged lives. I would visit their house, be like living in this little cement, space, much smaller than the room we're in. It's their whole, and they thought they were on top of the world. And I knew I had read, or I was taught at Yale, that Yugoslavia, by being a little more liberal, was doing better than Russia. So, what's this? So when I went on to graduate school, and there's a punctuation I'll skip, that I dropped out of school again. For a while, I represented the U.S. in the World Championships. That was unexpected, and I rode with that for a little bit. I finished second in the U.S. Championship, which in the top 2 players get to play in the World Championship.
So you were world-class level.
Oh, I played all the World Championships at one time, and there was nobody younger than me with a higher rating at the time. I wouldn't have been.
Oh, hence the intense focus on chess as a youngster, and you're not thinking about studies.
I was a very strong chess player. At 15, I drew the second best player in the world. I was New York State champion at 14. I was a strong chess player. I wouldn't have been world champion. It's a little bit like you could be a really good tennis player, but you just don't beat the top 2 or 3 players. It's just, you get to the quarterfinals at Wimbledon, and it's pretty tough to get to the quarterfinals at Wimbledon. I think that's where I was. That's where I was headed. So I went on to graduate school. I was going to do Russian economics. And it kind of dawned on me that this is dead, this field. It's just not interesting. I liked my professors, but it wasn't exciting. And on the other hand,
that was your opinion, or was that wasn't the general opinion?
People don't dump on each other's fields. Okay. So I wouldn't say people are crazy. No, nobody was saying that. They don't do that. They don't. Okay. We don't dump on other fields. That's really, really rude to do to your colleagues. You can be enthusiastic. I tell people International Macroeconomics is just amazingly fun and interesting. I don't say, you shouldn't be doing labor, you shouldn't be doing theory, econometrics. I don't say that. I would say, learn those things. It'll be really useful when you do international economics, which is really fun. And I had this have you ever heard of Rudy Dornbusch?
Of course, yeah.
Yeah, I had this.
I use a lot of his textbooks. There's some of yours as well.
Yeah, there's this incredibly charismatic professor. They're brilliant, just larger than life. I compare him to Orson Welles kind of personality. And he was just a magnet for students. He attracted all the smartest students, Bernanke, Krugman, I could go on and on. And everyone, his personality and his really sharp, clearly defined ideas, I think, inspired people. So, anyway, I fell into.
But on that clearly defined ideas, that implies that the fault of some lecturers or academics is that they don't present clearly.
Look, no, I'm not dumping on other people to praise him. You can be in a world where this is special. He was extraordinary.
Yeah.
I mean, if you ever saw him, say, criticize someone, you be a discussant at a conference where he would be discussing someone's paper, it would be like being shredded, by a lion. And it was hard to feel. I felt bad for the person, but it was so entertaining and interesting. Anyway, he really was insistent, that I do that. And just following like a little more on this, I still thought about chess all the time. I didn't play, but it's very addictive. Did you play?
I did, yeah. I did. I played when I was younger, and I played for the county and Oxford.
You played for Oxford?
Well, no, I played in the competitions. Not at the university when I was a teenager.
You grew up in Oxford.
Yeah, so at the county competitions, and I was doing well. And then the problem was, when I was 14, 15, I ran into these 6, 7-year-olds who were beating me. Suddenly.
No, I don't believe that.
Well, not quite, but like 10-year-olds or 12-year-olds, and I would ask them how many hours a day do you spend, and they spent all their days playing chess and learning, and I'm not going to do that. So then I realized I just gave up at that point. But
but I think if you play, and I said this about people who play poker and some other things, maybe bridge, I think what a lot of people don't understand is how addictive it is.
It is. I remember having dreams about chess and stuff, and like openings and this and what try this gambit. And, I mean, it's super addictive because there's every aspect of the game you can obsess about: the opening or the middle game, the end game, and what happens if you're in a ring, your back's to the wall. What do you do then? I mean, it's like an entire universe.
Then without going into detail, there's a lot of movies with dream sequences about chess.
Yeah.
They don't seem like dreams to me. I mean, I hear you, when I see those scenes. So it took me a while. I graduated from MIT. They weren't thrilled about my leaving. They thought I needed to stay. Another really great man who's still alive, Stan Fischer. He was, for those of your listeners, he was vice chair of the Federal Reserve, and before that, number 2 at the IMF, and a very respected person.
And we've all read the
Fischer and Dornbusch.
Dornbusch textbooks. I mean, that's kind of
and Blanchard and Fischer. And
yeah.
He's an incredibly also clear thinker, and I got there. Dornbusch was my main advisor, so I number 2. And
this was for your PhD?
This was for my PhD, and Dornbusch, Stan Fischer sitting there looking at the thesis, which had one good paper in it, and he goes, "Ken, do you really want me to sign this?" And I said, "Yeah, I want to get out of here." I said, "Okay." And so he signed it, but I wasn't ready. I mean, I wasn't ready for prime time. I was very lucky to get a job at the Federal Reserve, which was not someplace people wanted to go back then. Mm-hmm. It was pre-Greenspan. It was pre-Volcker and Greenspan. It had the, we can come to that later, but
it was Arthur Burns.
It was Bill Miller, who was not a very good Federal Reserve chairman and not very inspiring. There weren't a lot of academics who went there, and it took me a few years to become an economist. My head wasn't in it yet. And I had a couple of successes, paper on exchange rates I wrote in that period that was very hard to understand exchange rates. But I think the thing that really changed my life was my independent central banker paper. I wrote the first paper on why you should have an independent central bank. And it was funny, I wouldn't have written that paper if I was at Princeton, which was an alternative I might have gone to, but I went to the Fed. And at Princeton, you'd be writing very technical stuff. Yeah. And I came along saying there might be an institutional solution to this problem, which people wanted to use a lot of math. I have math in the paper, but they wanted a lot of math. And I didn't. And I wrote this paper where I was really, again, addicted to it. I worked in the middle of the night. And even though there wasn't a lot of math in it, there were still some problems I was struggling with. I feel like I had a quartic equation in there somewhere and I needed to know the signs of the roots, and how was I going to figure this out? And of course, nowadays with a computer, that's trivial, but it wasn't back then. And so I think, that's my origin story of where I really made the change to, really getting excited about what I was doing.
No, that's a fantastic story. And, I guess one question is, did you find chess helped you in some way in your, as an academic or in economics?
So, absolutely. Although it took me a long time to get my head wrapped around what it was that it helped you with. And in fact, in my book, Our Dollar, Your Problem, that just came out, it's the first time I've woven chess a little bit. I don't think it's heavy-handed. The reader can decide for themselves. But I wove it in because I'm thinking, I think about chess all the time. I use it a little bit in my public speaking. Why do I shy away from saying what I'm thinking? Like, if this is what I'm thinking, why don't I say what I'm thinking? So I weave it in a little bit. And I think there are different aspects of it. We could talk for a long time about it, but let me pick on a few. One, and I'm speaking this as an older economist, when I was playing chess when I was a teenager, there were positions I just thought I knew freaking everything. I studied them day and night. I had analyzed them with Bobby Fischer, with Ben Larson, who was the number 2 player. I had, played the world champions, eventually, but even as a teenager, I was playing very strong players. And I had some good ideas. And then I watched from afar as chess evolved. And the evaluation would change. And then it would change again. And then it would change again, deeper and deeper and deeper. And I don't know anything. I thought I knew everything. I don't know anything. And it's like that in academic economics. There's this, old saw that the questions never change, just the answer. And there's a lot of truth to that. And I'm not saying economists don't know anything. I would describe it as deeper and deeper. And so by having this long period I was away from chess gave me some perspective not to get cynical about things. That, it's very easy to sit in a seminar and say, this looks just like the last seminar I saw, and, try to keep your mind fresh. I think, of course, another thing it taught me is you're never smarter than everyone. You're just not. There's somebody smarter. Of course, there were experiences, and, there's one that stands out in chess. It's probably 16, and when you're young, by the way, you're really good at counting, looking deep. You don't know what to look at, but you can count a long ways. And I was playing somebody who was a couple years older than me, later rose to being number 2 himself. He was Yugoslav. And it was an important game. I needed to win with the black pieces to create a notch in my career. I got crushed. I didn't just lose, I got crushed. I took some risks because I needed to win. It's not really a thin excuse. But afterwards, to try to salvage some ego, we come to some position. And I said, okay, I didn't do this move, but let me show you what I saw. And he goes, yeah, no, actually, that's wrong. Do this. Actually, go. And, I was, you see that, and to kind of, have some humility about even when you have a good idea, somebody can have a better idea, even when you thought of something clever, somebody can think of something clever. I guess another way that I saw that was I would play over a game of a really good player, think of me as 16 or 17, full of myself as a player. I don't think I was like that in every aspect of life, but as a player. And I've seen him move 33. What an idiot. And I could have done better. And then you play them and you realize you only make it to move 17, where you make a mistake. And let's skip to economics, central banking. Everybody said, Bernanke did this wrong, Powell did this wrong, Yellen did this wrong, Greenspan did this wrong. And I think from that experience, of course, I'm going to recognize if they did something wrong, but I never say, therefore, they're idiots, which people, I can't believe how much people say. I put myself in their shoes and say, well, okay, that was a mistake, but they did 25 things right. What would your batting average have been? And that's a baseball expression. I apologize for it. How would you have done? And you're making one decision after another. That's very, very difficult. And to try to have some perspective on that when you're looking at it. Well, anyway, I could go on, but those are some examples.
No, those are great examples. And you mentioned your new book, How to Dollar Your Problem, which I've read it. It's a really, really good book, and I'd recommend everyone to read it. Well, first thing is not everybody will be familiar with where that expression comes from, because it's not something you just decided on. It's an expression somebody used. So perhaps you could talk about that, and then we can go from there.
Yeah. So the title's Our Dollar, Your Problem. It has a longer title I won't go into. Subtitle, which Yale University Press had me put on. It was a good idea. They did a lot of helpful key things. They did that because a lot of people would sad about it. But it's comes from 1971, which was, I think, the biggest shock to the system since Trump. And back in 1971, I think most people won't really know this, although you may have a very special audience where everyone knows this. Because I didn't really think about it that much. even though he's an economist. Nixon went off the gold standard. What does that mean? Didn't FDR go off the gold standard in 1933? He did, but governments could still hold gold, and governments could still trade their gold for dollars. And he depreciated the rate, but you could still trade. Individuals were not allowed for a while to hold gold. So the dollar was separated. But in a very key way, we were still on the gold standard because the U.S. could do whatever it wanted. But if foreigners wanted to trade their dollars for gold, we had to give it to them. And the system worked longer than one might have guessed because we did have some inflation and it should have made it attractive to trade the gold for dollars. But everybody was growing, everybody was doing well. Why rock the boat? But we started to have more inflation. We hadn't had the big inflation of the 70s. That came later. But we're talking 3-4%. I mean, still, why are you holding gold? Like after a few years, it's gone down in value. So the French finally called their bluff. De Gaulle and his successor finally called their bluff and started trading more and more. And there was a lot of gold in Fort Knox. You can see the James Bond movies and also in the basement of the New York Fed. But there wasn't really enough if everybody started calling it in. So Nixon said, okay, we're done. Everybody was furious because everybody was holding dollars. I think your listeners know how much is today. It was like that back then. What are we going to do? A, I can't trade them for gold. And B, you're inflating the Vietnam War, the Great Society. So he sent John R. Connolly over there, who was a Texan, who has a very colorful history. He was Treasury Secretary. He was in the car when Kennedy was shot in 1962, badly injured himself. They sent him over there, and they confront him, and they're yelling at him. And he goes, look, it's our dollar. It's your problem. And I think what speaks to me about that is, first of all, it was our problem because when we went up the gold standard, we hadn't really conceived the independent central bank yet. It wasn't independent at all. And we had this massive inflation, which was a disaster. The growth was terrible. It was our problem also. But the other thing that spoke to me, and going back to when I traveled as a chess player, I think something you learn as an American when you really have real relationships with people, you know that everybody loves the United States and everybody hates the United States. And you need to know both pieces of that. Like, they're angry at the United States. And the one thing that gets them particularly mad is the arrogance. And so it kind of captures the arrogance. And I don't like it myself, even though I'm an American.
And why after the war, even perhaps earlier, why was the dollar the dominant currency?
So when were you born, by the way? I might ask.
77.
77. So the UK wasn't doing so great that year. It's not a great year that you were born, but not a banner year. The UK was having one IMF program after another.
Crises.
But of course, particularly after the Napoleonic War, the UK ruled the world like no one has, really, more than the United States today, frankly, in terms of actual raw control and power. And the pound sterling was the global currency, no debate about it. But the U.S. was getting rich. The U.S. was the China of its day. And the UK let that happen. I have a colleague, Bob Allison, who has a great book about the rising powers and how to deal with them. And he notes that as late as the 1870s, it was discussed in the UK, should we invade the US before it's too late? I mean, that actually, was discussed. We're not, but the UK saw the US, I think, as a child of itself and would be okay. So the US was becoming the bigger economy. And by the eve of World War I, it was a much bigger economy. But the pound was entrenched. And it wasn't just that the US didn't want to be, wasn't there yet with the dollar. It was like a bunch of cowboys who had no idea what they were doing. The American bankers just were, hillbillies. I'm sorry, J.P. Morgan, I understand, but they knew nothing compared to the British bankers were just, much more knowledgeable about the world, how to do international banking. But then there was World War I, and both World War I and World War II are taught differently in the United States than they are here. I took just enough classes here when I was being a chess player in England. We're taught, we won World War I, we won World War II, and here we're taught the U.S. waited and waited and waited. Yeah. And that, of course, if you had a strategy of wanting to come out on top at the end, you let Europe destroy itself, and then you come in. And I'm not saying we did fight on the right side, we helped, but we waited. And so the U.S. suffered terrible losses in World War I, nothing like the UK. I don't have the numbers off the top of my head, but I want to say you lost 1 million people just to direct war deaths. We lost a couple 100,000. It's a lot of people, and then financially there was no comparison. And worst of all, we made you pay for all the equipment. We made you loans, and then after the war, a logical thing would have been to say, we fought on the same side. It could have been you and it was us, and you're going to make us pay for this? But we did. And that was a lot of, some of what Keynes was writing about. We held it over France, we held it over Europe. That already gave us a lot of power, but we were still hillbillies and pulled even with the UK between World War I and World War II. Well, World War II, we were much more magnanimous after World War II, but again, we came in late. Again, we lost much more in World War II and made huge sacrifices in both wars. I'm not want to be misunderstood, but by coming in late, we preserved more, and the U.S. didn't have the damage. So after World War II, Britain was really a wreck, and even without the United States holding debt over its head in the same way, it was just in no position to keep its colonies. It was in no position to be a power. And at that point, the dollar became supreme.
And from the way you described that, it seems like there's two components to becoming a contender of the dominant currency. One is economic strength, becoming the top dog economically. The other is military power as well. Would you say that those are the two key ingredients you need to be a dominant currency?
I think that's exactly right. Would you agree with that, by the way?
I think so, yeah, I would, yeah. I mean, the only thing I'm thinking about is whether you could have a situation where, how do you define dominant economy? Is it you have to be dominant in international trade? And so maybe let's say you're the second biggest economy, but let's say you have the largest trade connections around the world. Could that allow you to then become the dominant currency or not? I'm just
No, I thought that makes sense. I mean, there's more to being the dominant currency than just those two things. I think you're exactly right about that. But I think a part that people don't properly appreciate is the military part. Yeah. And I think particularly progressives in the United States just dismiss that as being important. And I think misunderstood why Europe didn't become more important than it did. And the Europeans, I think, misunderstood that. Why is it important to be a military power? Well, there's the crude part that I don't trust your debt quite as much if I know Russia can invade you tomorrow. But I think there's more to it than that being the military power, being one of the couple major military powers, at least, if not the dominant power, gives you a lot of bargaining power in everything. And you see with Trump just is crude. You don't use the dollar, I'm not going to defend you. I mean, he says things like that. But you know what? If you read the pages of what Nixon said, Reagan said, even Carter, and people before, it's the same thing. Where, well, yeah, I hear your case about maybe the, financial network should be more globally shared, the regulation. Yeah. But no, we don't really want that. And a subtext of that is the military part. And there's a lot of economists starting to write about this. So those are important, but you're right. There are many other things. And once you become entrenched, it's very slow to lose it. So the UK is still, after World War I, owing a lot of money, having huge damage. A lot of people, a lot of your elite were killed. Downton Abbey sort of famously chronicles this. So, you know, but it stayed equal to the dollar. It wasn't lesser to the dollar. So it takes time to switch.
And so that kind of leads to the question of what could topple the dollar. And, you know, every decade people question the dominance of the dollar. And you kind of rightly pointed out that in your sort of chess days, your early days, Soviet, you know, was viewed as this dominant power. And although today we look back and think somehow they weren't in equal power, back then they were. And so one question is why didn't the ruble become a dominant currency?
Well, let me work backwards in time a little bit. I appreciate you start with the ruble because it's one of the more out there things. Like I talk about in the book to be provocative and to help people understand. You need to look at history. Let me just go back 15 years. Maybe to 2000. Let's go back to 2008 or 9, actually. And if you go to academics, go to conferences, I was doing that. The near universal opinion was we were rapidly heading to a tripolar system. That's what everyone thought. And the top journals had papers about this. So Europe would be what it is today, but bigger. It would expand. It hasn't expanded. It's very important to Europe, but it hasn't gone as far outside of Europe as you would have expected. The renminbi, Xi hadn't been elected yet. They seem to be moving towards liberalizing their exchange rate. Now that's really important because part of what makes Asia part of the dollar bloc is China had hard fix to the dollar. So why hold renminbi? Hold dollars, that's what everyone was doing. Why peg to the renminbi, peg to the dollar? But there was a view, and I was certainly strongly of that view, that China should have a more flexible exchange rate. Well, again, I think almost all your super knowledgeable listeners know that if you fix your exchange rate to the US, it makes you a bit of slave to what the Federal Reserve wants to do, because if the US raises their interest rate and you're trying to fix your exchange rate, you kind of have to raise your interest rate. And ask anybody who's tried to do that, if you can do cartwheels to avoid that for a while. Why would China want to do that? They have their own business cycles. It's a giant economy. And I think the short answer to that is it seemed to be working. And the technocrats in China would say, you should liberalize the exchange rate, not necessarily everything, but have a more flexible exchange rate. And the very top of the top would say, no, we're not going to do that. And I actually talk in the book of meeting Zhu Rongji, and this was in 2002 when I was chief economist at the IMF, and it was a fascinating meeting. We talked about that, and he kind of knew what I was going to say. He actually was a bit of a fan of mine already. He had seen my debate with Joe Stiglitz, who wanted China not to liberalize its markets the way that they were doing, and he was trying to liberalize the markets. And I was critical of some of Stiglitz's criticisms. But he didn't want to move the exchange rate. And anyway, the book, kind of goes into that story. So, but everybody thought that was coming. And if it was coming, tripolar system, and the dollar might have a bigger place. But that's what everyone thought 15 years ago. So when Carmen Reinhart and Ethan Elzitsky, who's a great economist at LSE, we wrote a paper, it probably came out 9 years ago, but as things go, it takes a long time to get published. We wrote a paper, that ain't happening. We looked at our favored measures of how the dollar's footprint. It's going like that. It's not going down. What's going on? And so a lot of people, just we always knew that. We didn't always know that. That's not what we thought. We can work backwards over history, and you can go through the euro, which fell short, the yen, which fell short, and you mentioned the ruble, which probably never was going to take over from the dollar in the free world, but we didn't know that so much of the world would become free. We didn't know that, and I think people don't have a sense of history. They don't realize is that there were some lucky turns. I mean, just suppose China had freed its exchange rate, which I think would have been a great idea in 2010. And I think they would have had healthier growth and been in less trouble than they are today if they did that. It was absolutely a signal mistake that they did not do that. Suppose Europe had not invited Greece. Suppose Greece had not been made part of the euro. The euro might have had a crisis, but not like it did. And of course, the euro crisis was really the thing that knocked the euro back, and it's still recovering. Had Japan not agreed to the Plaza Accord, which is becoming famous again thanks to the Mar-a-Lago Accord, had it not agreed to that, they were eating the U.S.'s lunch. They were, dancing all over the United States in one industry after another. And as I grew up in Rochester, New York, which was the Silicon Valley of its day, and we got destroyed by Japan in one industry after another. Of course, Detroit did. And then Russia, I have young Russian friends who are at the top of economics, and they'll tell me, it's such a stupid system, it was never going to work. They had a moment after Khrushchev died in the mid-'60s when they were thinking very, very seriously about going the route China later did. There's the so-called Brezhnev-Kosygin reforms, which was going to move Russia to a more dual system. And it came close. And actually, Brezhnev became the leader. I mean, he wasn't an all-loser, but he was forced to give that up. He didn't want to. Brezhnev, we think of as this incredibly tired old man. He's sort of the quintessential, absolutely boring Soviet technocrat with no ideas. The young Brezhnev, when he was taking over, he wanted to change things. He saw things weren't going as well as they were reporting, and he wanted to change things, and they didn't. And, so I think there are many turns at which the U.S. has been lucky. And I think Americans just think, we're good. Of course you were going to be where we are. And it's just so ignorant. I'm sure some people will say, well, the dollar's not always going to be on top. Everybody knew it was going to be on top. First of all, telling you it's not going to be. My book claims that. I already think it's been in decline. But, you just look at this is how it was. This is how it was always going to be. And it's just very naive.
One thing that strikes me is when you mention the recent challenges to the dollar, China, Euro area, Euro, and then before that, Japan, in kind of the modern sort of period. I wonder whether most of these countries, all of them were current account surplus regions. Euro area, you could say, sort of Germany as sort of the central sort of point. And that almost implies that obviously they run a capital account deficit, then the US runs a capital account surplus. And so that means that the US needs to have very deep capital markets. And so I wonder whether we flip it around to the capital market side, and that's how we need to think about dominant currencies, that it's really the capital markets that drive everything. And the fact that the US has such deep financial markets that it then allows the US system just to permeate the plumbing of the world financial system, and through that you retain currency dominance. Like Euro area, surplus going to Japan as well. So it's not so much about trade. I mean, the sort of top dog trade-wise, it's actually the other way. It's who's got the deepest capital markets. What do you think about that?
Well, it's a really good point. But again, now the euro area is in surplus.
Yeah.
But if you go back
That's true.
to when we're having these conversations,
It was in deficit.
there were a lot of countries running deficits. Germany, after it merged with the former East Germany, was in big financial trouble.
Yeah.
People forget that, it's rich. They had a real scare after doing that. They were very generous in how they absorbed East Germany. They made the wages the same in both places, which was, a bit crazy, but they did. They spent amounts that were just staggering on rebuilding it quickly, turning Berlin into the capital, and such. France chronically had been in trouble. France is not, a chronic surplus country at all. Italy wouldn't know a surplus, if they stared them in the face, et cetera. So, that shifted after the debt crisis.
Yeah.
So that was one of the things that shifted after 2010. But you're absolutely right about the U.S. capital markets being the, pride. Now, the U.K. has pretty terrific capital markets, by the way, and had the euro area had the wherewithal to not, the French wanted Paris to be at the center of Europe. The Germans wanted Frankfurt to be the center of Europe. And had the Europeans just reconciled themselves to our champion is London. We are going to do everything to support the UK to be the center. Things might have turned out differently. London, even to this day, is number 2. Even after leaving the European Union, it's number 2. This is a really strong tradition. Again, a lot of being a good financial market, and this is understanding the game, understanding what is being financed. It's not, again, the Americans in 1900 were hillbillies. We had a lot of money. We didn't know what to do with it. And, you can say that about some other countries as they're going along. So, yeah, it could have been different, but you're right, our deep financial markets, and a thing Trump doesn't seem to get is that these trade deficits he hates, and they've gotten a lot smaller than they used to be. I don't know what he's talking about. The mirror image are the capital surpluses. Well, what does that mean? It means other countries' money's coming into the U.S., helping build factories, bid up the price of housing and everything. Now, the UK's a deficit country too. What do you think of that?
Yeah, the UK is a deficit country, absolutely. And I think that in the case of the UK, the challenge, I think, is that it's over-financialized, I think, the economy. So what happens in the US is, I think that the US is able to attract capital, and a lot of it helps the broader economy in some way. I think in the UK, we're more like, all the capital comes here and then leaves or stays in London.
Well, that's really interesting. I've never heard the phrase over-capitalized, over-financialized.
Yeah.
That's really interesting. What do you think the UK should do? By the way, I get asked that all the time. I don't know what to say. How should the UK restructure, given where it is?
Yeah. I think it's a great question. You're turning the gun on me. I think the thing the UK needs to do is, number one, there's a huge sort of regional sort of divide in the country. That is quite alarming. So London, Southeast, completely dominate everything. And I think and if you look under the hood, what you find is that if you look at the cities across the UK, outside of London, they tend to punch below their weight compared to European peer groups.
I didn't know that.
Yeah, they tend not to do as well. And
so in other words, London's on top, and if you ask how number 3 is doing,
like Birmingham or Liverpool or something, they just don't. They just
compare
really go away.
Well, if I compare it to France, who would number 3 be?
I'm not sure who number 2 or 3 would be.
Marseille?
Probably something like that.
Not doing that great either, but okay.
Yeah.
But it's certainly compared to China, or where there are few cities doing well, the United States, where there are few cities doing well.
Yeah, and I think there's some, what the government has tried to do historically to deal with this is that they've done internal fiscal transfers. So they push the public sector to go up north, That's what Tony Blair did under the Labour government. And that doesn't necessarily lead to long-term productivity, when you just push. There are some spillover effects, but then you had the austerity measures after 2008, then all of that got withdrawn. So suddenly you end up in this kind of vacuum sort of since then. So I think you need some kind of combination of perhaps some kind of internal fiscal transfers, but there's lots of supply side things that I think one can do. So one example is that if you look at the big infrastructure projects the UK's done, they've gone for high-speed HS2, what's called, in London to connect to the north, spend a huge amount of money on that. And most of the academic work shows that won't lead to huge economic gains. Instead, what you need to do is you need to improve the internal transport within each city.
Oh, that makes so much sense.
Yeah.
But I hadn't heard it stated like that.
Yeah.
That makes so much sense.
Yeah.
I mean, if you want to live in Liverpool and you want it to be an exciting city where you can have a social life and do other things, you have to be able to get around.
So it's small things like that I think that they haven't really thought about. And then also I think the other issue is there's too much centralization of policy and decision making in the UK. It's very centralized to Westminster. You have to decentralize and push it to local authorities. The drive has been more to centralization, and I think that I think you have to decentralize, push sort of decision and spending as much as possible to sort of local areas. I think that's another thing as well.
Now, I hadn't thought to phrase it like that about the UK because I've thought about Italy, where southern Italy just has not caught up with northern Italy.
Yeah.
And what has northern Italy been doing forever, making transfers, but not, I mean, I don't want to, southern Italy's made advances, had some convergence, but it's disappointed, by and large, that Milan could be part of Switzerland. I mean, it's absolutely phenomenally successful, but you start going south and they haven't gotten there. And it's interesting. And switching gears a lot to the American university system, which has moved very far to the left. So is the British system, with conservative thought being absolutely pushed out very consciously. It's a terrible imbalance. And I think one of the things that's a manifestation of that is sort of what students are taught is the solution to everything's the government. We have to have, I'm a big believer in having good government and good infrastructure, don't misunderstand me. But, there's no thought about what creates a dynamic private sector. How do you made a very good point about the intercity transit. If you want the private sector to be dynamic, let it be connected within the city. That's a really good point. And but the Milton Friedman's just barely taught.
Yeah.
And okay, he was a caricature in some ways of the balance, but it's reached this other point. And I suspect if you read the British press, I haven't read it nearly like you have, and you ask everybody's ideas for what Rachel Reeves should do. She was a really good chess player, by the way, I will throw in. And I'm a big fan of hers. But what should Rachel Reeves do? It's all these, okay, some of them aren't, but all these solutions about the government should do this, the government should do that, we should do that. And not this sort of deeper thinking about how do we have more businesses like deep mind.
Actually, on that, I think there's an interesting sort of cultural aspect of the UK where, because I travel around the world a lot, and I'm also intrigued how people think about how to accumulate wealth or which market they like. I find the US quite entrepreneurial. One is they love the S&P, equities, but then there's an entrepreneurial startup hustle. The US has that. Now, the UK, I find people don't have as much of that, especially sort of more generally. And what they obsess about here is property prices. Property. Yeah. So when people have money here, they tend to go into property. Property development, buy an extra house, rent it out. So there's a real property kind of thing here. Like when you have money or how to make money, you have to become like a property mogul.
So why isn't there a startup culture? Because you have the legal system, you have the history of finance, you have the history of entrepreneurship. Why? What?
Yeah, I mean, I think some of that is to do with this real estate thing. That
it's just so tempting.
It's so tempting to put money into real estate. So people do that. So culturally, that tends to be quite a sort of dominant cultural story.
Like China. I mean, that's the same mentality.
Exactly, same in China. And I think that
I want to keep on.
And I think the other side is, I think there's a tax aspect in the US. There's also tax benefits when you do VC type investments. UK has introduced some of that, which is sort of helped the sector. I also think that the US had this interesting intersection between the military, universities, and startups.
Yes.
And the UK just hasn't done that. The universities here are very prosaic. They're too academic. It's like making money is like not what we do. They're trying to develop that, but they're late to the game. And
we're trying to move away from it in our university.
Yeah. So UK, they're trying to move to it, and I guess you guys are moving away. And the military just didn't do DARPA, or they just didn't engage with the private sector.
No, but the military has been our industrial policy. There's a great book called Chip Wars by Chris Miller, which makes the point that the cutting edge chips, the smaller and smarter, they're never economic. The best use is a military use, because military is not a zero-sum game. You were willing to pay everything to get a little better, or at least that's a piece of it. So the military paid for these chips, they pay for the development, and then the private sector is doing it, and then they can use it in other things. And that's been a big piece of how the US has stayed ahead in tech. Of course, the internet was famously built by the military originally, et cetera. The Europe has tried to have an industrial policy, but there's nothing like competition. The military, which progressives view as completely evil, I sort of understand that, but that is a competition. You are not going off and asking somebody, what do you think would be a good bridge to have? You are thinking, there are other countries trying to get ahead of you. You're trying to get ahead. We're not having some intellectual debate. We are really trying to win. And it's been, like a form of competition that's helped our tech sector.
Yeah, people just go to the US. There is some of that as well. It's English speaking, kind of.
We have pre-Biden and Trump, we were just sucking the elite off the world. That's absolutely true. And then Trump really stopped it. And he did a lot of good things, I think, in Trump 1, but that was stupid. And Biden kept it. It's very hard for my students to get a visa. They graduate at the top of their class. I have a student from a developing economy right now who is a star, got a job at, I don't want to say where, but one of the top financial firms. He doesn't know if he's going to get kicked out of the country in 3 years. Why would we do that? And that's Trump. And Biden kept it. I want to stress that Biden kept it. He didn't change that. And if we don't, we're going to lose that edge, because, of course, go around and look at who's running all our big tech companies, who are the huge entrepreneurs. There's some Americans in there, Mark Zuckerberg, but it's the exception to the rule. A lot of them are these immigrants who are brilliant and with fire in their bellies, that they want to, really change something. And some of the British, for sure.
Yeah. And I think that's one of the huge mistakes I think the US has made, that the US, just has this edge over everyone else, that the world's smartest people want to go study in the US, and the US can retain them, keep their talents and everything. And now the US is losing it. I think this is going to be a big problem. I was at Cambridge University recently, just giving kind of a lecture there, a guest lecture. And they were telling me they're inundated with applicants from the US now, whether they're students, postdocs, lecturers, professors, they all come over here, because people are so fearful about what's going on over there.
Oh, my goodness. You go to the United States, and I don't want to be hysterical about this, but our students are afraid that if they come, maybe they're from, I don't know, Poland, And they come, what if they want to go visit their parents? And they come back, and their phone going to get checked? They posted a Facebook post that could be interpreted as questioning the wonderfulness of America, and they're going to get, I don't know, sent to El Salvador. So you can say that's hysterical, but everyone is. And it's just wild what's going on at the moment.
And I guess kind of bringing it back to our conversation about US dollar or US dominance, things like this, which are kind of soft, these sorts of things. How do you measure human capital? How do you measure attractiveness of a country beyond the numbers? Is there a framework we can use to think about that or not?
So it's hard to do because it's soft. Coming back to something that's a little harder is what Ilzitsky, Reinhart, and I did in our paper, and I follow this in our book, is we say there are a lot of measures of who's the dominant currency. The easy one is central bank reserves, but it's a tiny piece of the puzzle. A bigger one is what percent of trade is denominated in dollars, which is important, but you made a very good point about finance is a bigger deal. So there's also a literature about tons of papers about what percent of corporate bonds issued abroad are denominated in dollars versus euro. There are various measures, but it's a little bit like people touching parts of blind people touching parts of an elephant, saying, what is it that I'm touching? So we developed this measure where we say, well, who knows better than anyone? It's the central bank. If you're the central bank located in Japan or India, you're seeing it all. And you're making a decision, how do I manage my exchange rate? Which everyone does. Everyone says they're inflation targeting, and almost nobody's really inflation targeting. The exchange rate for most countries is a very big deal. And if you look at what countries do, many countries have the dollar as a reference currency, or even an anchor, where they say they're floating, but they're barely floating at all. And if you use, we call this a portmanteau measure, that's a way of seeing that at the moment the dollar really is dominant, although we think it peaked in 2015. We think that it's gone down since 2015. Well, you have to realize China's become more and more flexible. Asia's half the dollar block in our measure. I think in any measure, Asia's half the dollar block. As China becomes more flexible, you mentioned about, being the largest trader. They are the largest trading nation. They are for a lot of Africa. They are for a lot of Latin America, and they certainly are for a lot of Asia. And so as they become more flexible, others will follow. And that we live in this very fluid world where everybody takes for granted that the dollar's like this. And I guess I'm saying that if Harris had won, I, by the way, thought both Harris and Trump were phenomenally weak candidates. So when I wrote my book, I only had a day after the election to change a paragraph, but I thought they were both going to be terrible. So I thought that the dollar would continue its decline. Trump has managed to, coming back to what you're talking about, really accelerate things. So what are the strengths? Our immigration, our openness to legal immigration. Biden had this idiotic open borders policy, but legal immigration, really important. Our rule of law, our university system, which is a magnet, our open trade, our open financial markets, our soft power. And you sort of check each of those boxes. And he seems to want to blow it up. And of course that's going to take the dollar down. It's not going to, we're going to stay in first, but the others will rise. We're forcing it. We're forcing Europe to rise. They don't want to. I'm joking, but they don't want to come together, but they have to. China sees what's going on. They have to move, and the rest of the world. So I think when we're living in this world where things are moving even faster than I would have guessed. And when I finished my book, everyone said, "You're really out there on the dollar. You're nuts. That's not going to happen." Maybe it's happening even faster.
One thing that I'm not going to try to rationalize Trump too much, but like one argument sort of behind it all is that there's this global imbalance. US runs a large current account deficit. China runs a very large current account surplus. And there's debates around why is that. So one, typical economist argument is the US doesn't save enough. So it's kind of US centric. And then there's a competing argument, should really be complementary, competing one that China oversaves. They depress domestic sort of demand or consumption. And then as a result, they've had all sorts of policies that floods the world with their sort of production. And so something has to be done to address that. So in terms of those two arguments, that's the US's fault versus China's fault. How do you sort of see those arguments, first of all?
So there are a lot of layers to this, and a lot of it is a question of domestic policy. So certainly there is this thing called the China shock that David Autor famously wrote about and won the Nobel Prize, where these jobs in the Midwest were lost. Now, as later work has come in about the China shock, it has been realized increasingly that that was a very popular position politically, the statement that he was making. The number of jobs was small. The numbers put it 1.5 million, which sounds like a lot of jobs, but in the U.S., I don't know, I don't remember the number off the top of my head, but 10 million jobs turnover a year, and we have a labor force of a couple 100 million people. It is nothing. Actually what happened in Rochester, New York, and Detroit with Japan was might have been a bigger thing. So. But we could have better policy, just like you talked about in the UK, for trying to deal with this. At the same time, clearly China has lost its way. There's no question about it. It's not doing well. But I think from my years of experience and writings on this, you probably need to become alarmed only when you see a big change. If everything seems to be going well and it looks exactly like it did 10 years ago, it's not necessarily perfect, but not necessarily panic. When you do need to panic is when the imbalances are going like that. And I actually was writing about that I've been writing for a long time. In the mid-2000s, I was writing about that with Maurits C, and we were saying the U.S. current account, which now is, 3% or something of GDP, it had reached 7%, and it had very suddenly reached 7%. What is going on? And of course, I think it was only later when I was writing the book with Carmen Reinhart that I fully realized what it was. We had improperly deregulated. That was sucking money in. We were making it incredibly attractive to gamble money in the United States because the government would back you and,
so you ended up with Germans being long U.S. subprime.
Exactly. So when I think in general, in looking at financial crisis, housing crisis, when you see a big change, if you sort of look at your own, go to the doctor and you've had something, your arm's been a little sore for a long time, think about it. But if suddenly your arm's aching, let's have a look at it. Let's see what's going on. I think you need to think about the imbalances that way. Certainly, whatever Trump's doing, the cure is worse than the disease. I strain for choosing words about how stupid it is. Now, okay, I'm not somebody who says everything Trump does is wrong. I think, in his own way, Trump 1 had a lot of successes in the economy. I think Trump 2 has some points about things he complains about that he wants to change. But this one's just a head scratcher to me. I just don't get it. what he imagines. I don't see anyone articulating a vision. Okay, if you go to Fox News, which also speaks truth sometimes, for sure, it's not always wrong by any means. But if you, it was always bringing manufacturing jobs back. It's just America needs to do this. What? First of all, I think a comedian said, I want to wear Nikes, I don't want to make them. It's probably the feeling of the typical American. Automated factories. Farming, we were great in farming. I don't know what the number was, but about when after the American Revolution, 75 or 80% of Americans were working in farming. And even in the 70s, when I was in college and later in graduate school, everyone was romanticizing farming. We have to have the American farmer, the same ads for manufacturing, the same trade policies were about farming. Well, it was wrong. We're an agricultural superpower. I don't know the number off the top of my head. I know it's less than 2% of Americans work in farming. It might be down to 1%. That's where manufacturing's going. We're not bringing jobs back, so that's dumb. Okay, resilience. I'm all for resilience. Like, do you want China in particular to be making all the derivatives needed in our drugs? No. We would like to diversify that. We would like it to have done in other places. Does that mean we want it all in the United States? No, we just don't want it all in one place. We are not good at shipbuilding. This has really emerging as a problem. Our Navy needs to be rebuilt. The Chinese are really, really becoming a naval power in a way that the transformation is as big as anything the world has ever seen. They're very good at building ships. They have half the world's commercial shipbuilding. So Trump wants to bring it back. It's not going to happen because the commercial shipbuilding, if you're not building commercial ships, it's hard to build defense ships cheaply. But we have Korea is really good at building ships. There are allies of ours good at building ships. Do we have to put taxes on them? We're the United States. We have 350 million people. China has 1.4 billion people. We kind of need some allies in this. And so it's just very hard to know what's going on.
Maybe if you flip it the other way, I mean, what circumstances is it appropriate to use, say, universal tariffs as a policymaker?
So that would be very different than what we're doing. So if he had just put a universal tariff on, as opposed to having, this game show where he spins a wheel to see what countries to put a tariff on, and then he spins it again to see what tariff, and then he cuts a deal. I didn't like the deal, and changes the deal 2 weeks later. This is incompetence, supreme incompetence. He says he's a great deal maker, but that might work in real estate. It's not a way to have international relations. If we had just put 10% tariffs on everything, it's not something I would support. I am a globalist. But economists have been studying this for a long time, and quantitatively. Paul Krugman wrote a very provocative chapter in his first popular book saying, if we put on a 10% tariff, I can't remember, maybe it's a 5% tariff, who cares? He does a back of the envelope calculation. He says the US is a big economy. It's going to affect a little bit. We're barely going to notice this. I put together a symposium on this 30 years ago for a big journal, and got all the top people to write papers on it. Nobody could find a different answer. They were, instead of using a back of the envelope calculation, we're using some complicated general equilibrium quantitative model, whatever method they used. And then I continue to see papers on this. And the result we have, we could be wrong. I mean, you can think of things like how does it affect innovation? They're all been weaved into papers trying to figure this out. The bottom line is if you just put in a 10% tariff, it's like a tax. It's not a particularly good tax, but if I put in an extra 10% sales tax on everything in the UK, because you wanted to raise money. It's bad. It hurts investment. It hurts businesses. But if at the same time I cut a bunch of other taxes, we could talk about it. So that's what we thought Trump was doing. I think when the businesses were having the stock market go like this, the view was he says he's going to do tariffs, and I think everybody believed it. I don't think people thought there were going to be no tariffs. He was definitely someone who in his first term did everything he said he was going to do, and he's going to do everything he says he's going to do. They said he's going to do tariffs, but he's going to do less regulation. Biden, was hugely expanded the regulatory state in ways that I think were bad. I, by the way, don't agree with everything Ezra Klein says, but he has a very good book, Abundance is the title, where the point of his book is we progressives, he's a progressive, don't understand trade-offs. It's great to protect the dartfish in California, but if that's going to lead to burning down Los Angeles, maybe not such a good idea. He goes on and on with a lot of examples. I think it's a really good point. I think a lot of the growth of the regulatory state that happened under Biden comes from this failure to appreciate that they're trade-offs. And so Trump was going to undo that. Some of the things he was deregulating, we shouldn't deregulate. But I think on balance, it was a healthy adjustment. There was going to be the preservation of the Trump tax. I don't agree with everything in it, but it was pro-growth. And instead of getting this switch of policies, which by and large would be pragmatic, and I thought, if you went to Wall Street, and I'm not talking what they say publicly, privately, and you know this too, and you asked, well, what did you find people were saying before the election, Harris versus Trump on economic policy?
Well, everyone in Wall Street were pro-Trump, basically.
On economic
policy, based on the continuation of low tax, deregulation. On the tariff side, correct. They'd expected one and done universal tax, a bit more on China. That was the assumption.
Exactly.
Kind of a rerun of Trump 1.0, just a bit more, expensive on maybe the tariff side. But that was a base case for everybody.
Yeah. No, I think so. I just want to be careful to say I don't say everything he does is stupid, which some people, do reflexively. Otherwise, my students mostly think that, and I say to them, okay, if I give you a multiple choice test and you miss every question, doesn't that mean you knew the answers to the questions? I mean, who could be so brilliant as to be wrong on everything? But on this one, it's been absolutely mystifying.
One thing, you're a great student of history, and one thing Trump romanticizes is the 1800s, the late 1800s, McKinley, Jackson, for the reasons, the whole tariff era. America had tariffs, we didn't have income tax. How do you, leaving aside the specifics of how he's executed tariffs, but that philosophy of those were the good days?
Well, point number one of the idiocy of that is we barely had any government. They didn't need to raise a lot of taxes. It's true. We mainly have tariffs. If you go back to the 1800s, it wasn't very easy to collect taxes back then. We have the information that collected income tax. Imagine if everyone's watched old Westerns. Can you imagine, you go into the saloon and he's collecting the sales tax on the whiskey that he's giving? It's just like preposterous. So it was only when we developed better accounting and such. And I think everyone understands that having things like value-added taxes, income taxes is just much more efficient. By the way, value-added taxes are more efficient than what we have in the States. Had Trump said, we're going to have a value-added tax, which he seems to think is a tariff, because he describes Europe as having a tariff on American goods because it has a value-added tax. Okay. If he believed that, could somebody have just convinced him for his radical policy to switch more to a value-added tax, which would be a great idea. I think someday the United States, if we need to continue to raise revenue, we'll have to do that. But
and US is very unusual in not having the
very unusual.
I
and
was thinking of that recently. It's odd.
Yeah, no, Greg Mankiw, my great colleague and one of the other 3% of Harvard professors who self-identifies as a conservative, says, Europe raises so much more taxes, they can't do it as inefficiently as we do. They realized they need a more efficient system, so they went to value-added taxes. That was very clever. And the tariffs are a very, very inefficient system. So, even as things stand, we need to raise, 20% to 25% of GDP in taxes, federal taxes. What were our tariffs back then? 5%. Well, you're not going to raise anything. Another, and I say this a bit facetiously, but tariff policy is incredibly corrupt. Every time you go through the customs office, your family comes from Pakistan. Have you gone back?
Yeah, I have.
So, I mean, I actually have
corruption, around.
Yeah, that's what I hear from my Pakistani students, and India too.
India,
you go pay a bill, but you have to slide some cash, at the same time, and so you put in a tariff system. It's corrupt beyond imagination. It creates a lot of problems, but a universal tariff system is less corrupt because everything's 10%, so you're not negotiating over, is this a 5%, is this a 15%? But analytically, had he just done that, which is I thought what Wall Street thought, it would have been fine. And it would have just been, we'd be living in a different world than we are. But he did this. I have to say, the assault on the American universities is also undermining a strength. And now, okay, people need to know I'm a university professor. I have a self-interest. Although, mind you, I'm 72 years old, so my self-interest is a little less than if I was 30.
Spoken like a true economist there. You NPV your life.
It's not that I don't care, and I care about Harvard's reputation, but qualify it. But there are problems at Harvard. We have a genuine problem with lack of intellectual diversity in most of the American universities. It's not simply what percent of professors that identify as conservative, which just 25 years ago would have been small, but 25% were the numbers that Derek Bach, the former president of Harvard, wrote a very eloquent article. And in Derek Bach's article, he goes through the reading lists of the universities. So what do you get? What did you do, by the way, in university?
Economics.
Oh, you did economics.
Maybe
not a good example, but if you study history or you study English, he says that if you look at the reading lists, they're okay through about 1910. But after 1910, they look like a progressive handbook. There's no counter viewpoint. I haven't checked it myself, but he says books like 1984 are viewed as too conservative, and they just disappeared. Shakespeare has almost disappeared.
Really?
Oh no, absolutely not.
Shakespeare.
Well, of course, no. I love Shakespeare, but you can go on and on about these things. So we need a more diversity of views. Students should be confronted with other opinions, and this whole insanity of safe spaces and stuff that should apply to your physical, health, but not being triggered by anything. And anti-Semitism is still rampant in American universities. There are problems, but Trump wants to turn Harvard University into Trump University. The list of demands, and I don't want to go through the whole back and forth still going on. It's going to get played out in court, but the American university system needs fixing, but again, the cure is worse than the disease that he's proposing. It is absolutely, maybe it's our most competitive sector, year in and year out. He wants to destroy it. I think he wouldn't say that, but his actions, speak differently. So again, going back to undermining the dollar, the university system, the immigration system, I don't want to go off in the rule of law, but we've all seen all of that. And I think you can't unring this bell. I think the forces and historical forces that I paint in my book that I took a pretty dark view of, because I thought Harris was completely incompetent. Also, it's not that I think everyone is, but I think the American public has gotten in this very extreme, you're either extreme left, I don't know what Trump is, or Trumpian. And we were headed for a period where the dollar would be in faster decline. In other words, moving more towards that tripolar system that we thought just 15 years ago we would be in, moving to much greater volatility. I don't think we've seen anything yet on the volatility with what's going on. It's shocking what's happening. But I don't think it would have been smooth sailing under Harris either. I think we had a lot of troubling ideas on both sides.
And you said we can't undo this. So, for example, many people in markets, I speak to lots of investors every day, maybe that it's more hope than anything else. What they say is, looks like Trump is capitulating. So we could end up in a scenario where he just gives in and lowers the tariffs, and the hope then is, okay, we're fine after that. We've had this sort of storm of tariffs, and then we're done, back to normal after that. What would you say to that?
Well, he redid the North American Free Trade Agreement just, a little over 4 years ago. And then he changed his mind, radically changed his mind. So, okay, say we're a year from now and there seems to be calm. Do we have a betting market in whether he's going to wake up and want to do it again? I would put a lot of money on it coming back, and not just on China. And the problem is, it wasn't just the tariffs, it's the incompetency. I feel we have a crisis of competency. Again, Trump did a lot of things right, and my Harvard colleagues could disown me, for saying that. I wrote that in 2016 when he was elected. I said, okay, I don't like this person. I didn't support him, but I think there's going to be a boom. And I got letters from, I don't want to name names, but you can pick the most famous names in American economic thought leaders. I think, like, you are crazy. You should sell everything. You probably heard that yourself. Yeah. And when Trump 2 came, I said, this is not going to be as good because everything he's adding is a bad bell and whistle on Trump 1. And I wrote a darker thing. Didn't know it would be this extreme. And if you've seen, he's going to go there on the rule of law, on undermining things. Where does it go next? Okay, maybe the tariffs will come back to normal. Do you think he'll come back to normal? Do you think that? I'm not I like to say I don't have Trump derangement I don't have Trump derangement syndrome. I like to just look at things objectively as an economist, and I'm sure you do, and looking at investors. But maybe he's a lot older than he was. I hate to say that, but I don't know what's going on. Becoming more like himself, so to speak. I mean, I'm older, I can say that. I don't know what's going on, but I don't trust his competency. There's some very good economists around him, by the way. Not saying that, but he not the ones he's listening to. A lot of that, if you look at closely, was Vance.
Yeah.
I mean, if Vance had just shut up, which he was supposed to do, that meeting would have gone completely differently. Well, who's going to be the presidential candidate in a few years? I don't know that Vance will win. I mean, I think probably if things are going the way they are and the Democrats come up with a centrist candidate, I would put my money on them. I will put my support on them if they come up with a centrist candidate. But
I also think Trump's a very singular character, and I think people trying to imitate him, I don't think that works that well.
Okay, you're younger than me, but I will throw in a challenge.
Okay, go for it.
So one of my speaking jokes 20 years ago was about George W. Bush, which back then the same people who think Trump is the worst thing ever thought Bush was the worst thing ever. And by the way, invading Iraq might have been worse than anything Trump has done. We could make that debate. But I was only slightly paraphrasing President Bush, where he would be asked, how do you feel about people saying you were the worst president ever? And Bush would say, well, everyone used to say that about Herbert Hoover, and now nobody's saying that. And I bet you there'll be a president in the next couple decades where people are saying he's worse than Trump.
Yeah.
I think this is not just, it's a singular person, but it's a problem of the
country. Yeah, that's fair. I agree with that. I guess I made more, like, when I look at Vance, I feel like he's trying to imitate Trump in terms of
mini MAGA.
Yeah, mini MAGA, and I think that it doesn't come across as well as Trump.
He's a phenomenal politician. I mean, there's just no question about it. And he has a sense of humor. He's people who just think he's dumb. Actually, I want to come back to chess. If I were to describe Trump as a chess player, and maybe this will, you play chess, right? Yeah. Maybe this will mean something to you. I would describe him as a very good coffeehouse chess player. Yeah. So what is that? Yeah. You go into a club or somebody playing in a coffeehouse, and there's this person who doesn't have a lot of book learning, or no extensive openings and end games, but they have a lot of intuition. They're very alert and they're quick and very dangerous on the attack. And if you're a pretty good player and you play against them and you're not taking them seriously, you're going to get slaughtered. And I think that's Trump. I mean, somebody who's got a lot of intuitions. He's, not raw. He doesn't understand some book learning things, but he has some great street smarts about a lot of things. And he has some gifts. But I think there'll be others who come along and take some extreme policy views which have, been shown to work.
Mm. Now, one thing you've done a lot of work is on debt. Mm-hmm. After the global financial crisis, you're this time is different, fantastic piece of work, very scholarly, and it sort of continues to be referred to today. And part of this whole dollar story, I imagine, is linked to U.S. deficits, not just the current account deficit, but the fiscal deficit as well. The overall level of U.S. debt is high. How does the U.S. debt, government debt position, feed into your view about the sort of decline of the dollar?
Well, it's absolutely central to it. As you say, being able to tap international financial markets is a great strength of the U.S., but the government's been doing a lot of the tapping. So our government deficit right now is triple our trade deficit. If Donald Trump really wanted to reduce the current account deficit, the obvious thing to do would be to reduce the budget deficit quite a bit. I don't think he'll do as much as he should. So our deficits are, I think, unsustainable. Now, there was a period after the financial crisis where people decided debt is a free lunch. I wouldn't just say it was radical progressives or radical conservatives. It was mainstream academia had decided that we thought it was something, it was wrong. Countries should borrow more. So Larry Summers, have you covered secular stagnation?
Yeah.
And these, famously said we're in secular stagnation, and he kind of said we'll be there forever. Interest rates are never going to go up again. Debt's not a problem. Governments are borrowing a lot. They should be borrowing much more. He wasn't alone on that. I debated that with him all over the world. I debated it with Paul Krugman. I debated it with Olivier Blanchard, a brilliant economist. Blanchard and Fischer is a great textbook, a great man. But he gave this speech as president of the American Economic Association in 2019, basically saying debt not an issue anymore. We just don't need to think about it. And I think, again, these things are debated, but it was predicated on interest rates just being lower forever. And I never believed that. That's what I debated with them. I said, if you look at history, the long-term real interest rates are not. Sometimes they're high, sometimes they're low. And I have a paper in the American Economic Review very recently with Paul Schmelzing and Barbara Rossi looking carefully at this. My book draws on the work with them quite a bit. And if you look at longer periods, it's probably a lot closer to normal now than it was during that period. It hasn't gone up 5%. At the low, it was minus 1%. Between 2012 and 2022, it averaged 0. And now it's around 2%, the 10-year inflation index bond. That is a world of difference on your debt dynamics. And so this idea that you never have to adjust, I think we need to forget. We need to make some adjustments. But America's not ready for that. They just, I don't know what Trump's going to say, but I think his actions will lead to bigger deficits. I want to pick up on one important point, the sort of a debate that swirled after our book, which is people, said the level of debt just doesn't matter. And if you have high debt, maybe it's a slight inconvenience, but it's small. And at the same time, these same people, particularly left-wingers, the progressives, said stimulus is amazing. And if you say high debt is bad, you're getting in the way of stimulus. You should never get in the way of stimulus. Well, that's failing to recognize trade-offs. Again, I mentioned Ezra Klein's book. And I would say to them, okay, we have 120% of debt to GDP, and most of them still think it doesn't matter. I'm talking about the academics, the people who are the deeper thinkers. I just did an R-Star conference. You've covered R-Star.
Yeah.
I did an R-Star conference at the New York Fed, where I think most people just think it's still like that.
Yeah.
And surveys don't say that, but that's what they think. And they think we should have more stimulus. And it's okay, and you don't think the debt matters, so debt doesn't matter, stimulus is great. Let's have a debt fairy come and wave a magic wand, and suddenly that 120% of debt becomes 60%. And the debt fairy says, for the next 30 years, knock yourself out with stimulus. You can have 2% extra stimulus on average. And their eyes will light up. Oh, that's fantastic. So wait a second. You said it didn't matter to have 120% of debt to GDP, but I don't, it's nuts. And it's a trade-off. So every time if you have a recession and there's a big gain, Russia's invading you and you're Germany, good time to spend money. It's a trade-off. And the people who said there's no trade-off, I think it's looking pretty embarrassing at this point, which was a big majority of the American economics profession, not to mention the opinionologists, and that's looking, and I think that's a problem. People haven't recognized it enough. You hear some talk about it, but it's not enough. So that's undermining. We're eventually going to end up with a problem with this. And that's going to be a further leg down on the dollar. But it's not about defaulting. So let's take the case. Let's take the case of Japan. I was in Japan in the early 1990s, working at the Central Bank of Japan, the BOJ, and that was at the peak. Japan's was richer than the United States by any conceivable measure. Its stock market was worth more than all the U.S. stock markets combined. Its land was worth more than all the land in the United States combined. Its GDP per capita was higher than the United States. Then they had their financial crisis. Their debt has built up to either different measures, but they'll call it 250% of GDP, more than roughly double the United States. Okay, they haven't had a default, but their per capita income's now 60% of the United States. It has been a miserable growth period. That was our point, was that it's not good for growth. Why? Well, there are lots of reasons. It depends. But in the case of Japan, they've had financial repression, mega financial repression. They've taken this debt and stuffed it into every, nook and cranny of the financial sector, the pension funds, the insurance companies, the banks, the shadow banks. Everybody has regulations that make them hold Japanese debt. And it has stifled growth. It could have expressed itself another way, but it has stifled growth. And there wasn't as much money to lend out for other things. And there's a fear of raising it more because living in Japan, nobody's saying it doesn't matter. Nobody's saying that. That might be something they say at the American Economic Association meetings in New York. Nobody's saying that in Japan. They're thinking about it all the time. And in fact, the debate in Japan now is they're having a little bit of growth and they're having inflation. They're having to raise interest rates, but they have all this zero interest debt stuffed in everywhere. Why isn't there a financial crisis? Because it's all repressed. But they're talking about cutting their Social Security, cutting their medical care. And again, Blanchard, Summers, all of this, we're saying you'll never have to raise your taxes. Raise the debt, never have to raise your taxes. And that comes back to your point about the interest rate. I think it is true that, the interest rate is probably higher than the long-term real interest rate is probably higher than the expected growth rate at the moment. And it is true that if we just sat with zero deficits, which, by the way, is like telling somebody who eats a big meal every day, you're not going to have a weight problem because you're going to stop eating a lot for the rest of your life. The U.S., even Trump, Scott Bessent, who says very sensible things. He's the Treasury Secretary of the United States. Very sensible things, except about tariffs. Sort of said, we're going to bring it down to 2%, the deficit. That's not zero, which is the Blanchard calculation. That's 2% still another $600 billion, out of somewhere that we're going to cut. Imagine that. It's still quite a diet, and we're not prepared to make it. Moreover, interest rates can move. We can be having low interest rates and they go up. And you know what? All those people who said the interest rate would never be affected by debt, they're changing their minds. Even here, the academic work, left-leaning as that may be, has come to the conclusion, wait a second, we were wrong. When debt goes up, interest rates do rise. Not a lot. Back of the envelope number would be 0.25% for every 10% of GDP debt rises. Point where markets challenge this more. They're challenging, to say they're not challenging it, interest rates have gone up. Yeah. And I think if we don't make adjustments, they're going to go up more. And I think the end game of this can take many directions, but I think it will be a combination of a Japanese-style financial repression and much, much slower growth, and inflation.
And actually, on that inflation point, one thing I've been looking at recently is how inflation expectations have changed since April the 2nd, the so-called Liberation Day. What's interesting is that if you look at inflation swaps markets, they're essentially pricing a surge of inflation in the next 1 year. But then after that, for it to mean revert back down towards 2%. So the inflation markets are basically, this is transitory, everything that's going on. And then also, if you look at economist forecasts of sell-side analysts, they're expecting inflation to pick up over Q3, Q4 this year, then for it to mean revert back down. So it seems like one of the reasons why the long-term interest rates have not gone up as much is that long-term inflation expectations have been anchored. And part of that, no doubt, is linked to the Fed's credibility. So what are your thoughts on the intersection between long-term inflation expectations, the Fed, independence, credibility, and obviously what Trump's been doing?
So first of all, on the facts, what you say is true, but if you look at business inflation expectations, which admittedly are not like the professionals that you talk to who are, probably know better than anyone, but nevertheless, they're not necessarily setting the prices. If you talk to consumers, they're much darker. the inflation expectations, the long-term inflation expectations. And eventually, they're making the decisions that are deciding where it's going, not the professionals. I think the professionals overestimate the independence of the Fed. They don't fully understand the political economy. It is modern central banking is a relatively recent invention. Again, I think I mentioned I wrote this first paper on central bank independence when I had a lot of trouble getting it published, by the way, because it just wasn't what people didn't think there was an institutional solution. But it's new. The Bank of England, it was 1997. Am I getting that right? It was sort of something very new that this has been done. There's a lot of pushback. My neighbor in Cambridge, Massachusetts is Elizabeth Warren. And I, by the way, strongly agree with her on 3 out of every 10 things that she says. Central bank independence is not one of them. She really wants the Fed to be brought much more under the reign of the Treasury. I've spoken to some of the brilliant progressive economists that work with her, and they want to bring the Fed back into the Treasury. That's a progressive goal. They were saying that very openly in lots of ways. Some of the desire for a central bank digital currency is to suck all the money out of the private sector and then have the central bank choose where to lend it. So there are pressures there. There are pressures from the right, and we're seeing them in real time. People, they understand that the Fed's independence is important in the long run. It's popular at the moment in Congress, but it's vulnerable. It's not like the Supreme Court. The Supreme Court is vulnerable in some ways. You can actually stack the Supreme Court. Franklin Roosevelt threatened to do that over the U.S. default case when we defaulted on our gold debt. And Poland did that actually not so long ago, stacked their Supreme Court because the president didn't like what they were doing. The Supreme Court's not invincible, but the Fed is really vulnerable. You literally could make it disappear in a week if you had Congress behind it. It's an act of Congress. It can be undone with an act of Congress. It's not in the Constitution. And there are many subtle and indirect ways you can pressure the Fed. There's nothing subtle about Trump, you could say. But the Fed has always leaned with the wind when it sees this. It protects itself. It believes that its long-term independence is important. I think if we look at what happened after the pandemic, the burst of inflation, again, I mentioned, I don't know, I would have done better. If Larry Summers would have done better, but I guess most economists, they're not so sure they would have done better than Powell did. But he was certainly leading with what Biden wanted. Biden wanted to put on his big show of fiscal spending. He wanted to boom the economy. He did not want to raise interest rates. There are ways they can pressure. They can cut the funding of the Fed. Vivek Ramaswamy, who presidential candidate, now Senate candidate in Ohio, he wrote a Wall Street Journal op-ed wanting to cut 90% of the Fed staff. By the way, he had some arguments on his side about them writing about the environment and social justice and why are we sponsoring this, which they were doing in part to protect themselves against the progressives, that the Biden administration wanted them doing that. So I don't think Fed independence is as sacrosanct as people think. I want it to be. But let me look at this one other way. Suppose something happens where we have a kind of shock which really requires some kind of default on U.S. debt. We're not going to literally default, but it requires a default. To say that could ever happen is an absurdity. We can have a cyber war. I mean, if you don't have the imagination to think that there's a plausible chance we're going to get a shock in the next 20 years that just, blows out the federal budget, you're just naive. It's just naive. It happens again and again in history. We're not on the goal. You know, we're on this inflation targeting standard. You don't think we're going to give that up in a situation like that? Of course we will. And so just to think that we're going to come back steadily to 2%, I think it's very naive. And I'd even say much sooner than that. I would guess we're going to get another financial crisis, pandemic, cyber war, level shock within 5 years. And when it happens, maybe it'll be deflationary, probably not. And then we'll probably have a burst of inflation.
It's very sobering. It all makes sense.
And if you go back into the late 1920s and early 1930s, the Fed board was like, they had a room in the Treasury. This independence, there was a period where they were expressing more independence. Arthur Burns was, by the way, G. William Miller, who I worked for, was certainly not an independent Fed chair either. Yeah, but Volcker changed things. Volcker woke up, and I think there was also an intellectual rethinking of the whole thing. But this isn't, ingrained. No. By the way, wasn't free trade ingrained as being something really good, and then suddenly, we don't have free trade? So I think the political. Let's look at some other pressures. High debt is pressure against that independence. When Volcker took over, what was debt? 30% of GDP. Now it's 120% of GDP. Raising the interest rate now, what it would do, think about if he had to do it. We live through this era of globalization. We're clearly living through a retreat. I don't know, deglobalization is too strong, but it's going to be a worse period. We had the Washington Consensus, which has been much bashed, but actually had a lot of sensible ideas. That's now populism's replaced that all the elements of the Washington Consensus, Trump, and not just Trump, also Biden, kind of reject. We had the growth of China, now we don't. We had a period where term premia were shrinking on long-term debt. That was actually not a long-term trend. That was a short-term thing. That's not going on. So it's tougher being the head of a central bank. It's not as easy. The whole debate is different. And I think, if you look at a longer view of history, you go through these periods where it's sensible until it's not. We had a good run with the gold standard, where they stuck to it, they did things that were sensible until they didn't. And, why would this be different? Our politicians have their own pressures, and the fact that the Fed's not totally independent is important. They understand their role, and Powell's been great on this. And he may get fired at some point in the middle of it, but they've done a good job understanding their role. But they're not a sea of institutional stability. I'm sorry, I don't know. They're not a sea of institutional stability and an island of turbulence. That's just not how the world works. If the whole world's falling apart around you, it undermines the underpinnings of the Fed. And I think it does puzzle me that markets don't understand the tail risks of high inflation, not tomorrow, but next 5 years, another Biden type inflation, or I would say 2 Biden type inflation, I consider extremely likely. I didn't get a chance to ask enough about your backstory, Bilal, but I'm assuming it's very enterprising and creative to look at the success that you've had. I think for at least many people, it's important to try to not just follow the straight and narrow, do what you think is going to be safe. Nothing's safe. Creativity is safe. You have to take some chances. You have to take some risks. You may fail at some things, but you have to be willing to take those chances. It's really important. Again, people come from different circumstances, and some people have the economic ability to take chances. Some people don't. But at the end of the day, you should always be looking for where can I fit in creatively into things. AI's closing a lot of doors, but I think it's a long ways away. I don't know how long, but a long ways away from closing that. So I just, say to keep your mind open about things, of what it is you really want. Be patient with yourself. I took a long time to make a transition to becoming an economist. I really was in the wilderness for a long time, not quite knowing what I wanted to do. So I think that's the most important thing I'd have to say.
That's great. Now, you've also written a number of books. Presumably you must read a lot as well. So what some of the books that influenced you over your career? Were there some books early on or even recently that you thought, that changed the way you think or formed part of you?
Yeah, I mean, I really liked Isaacson's Ben Franklin book.
Yeah.
Walter Isaacson. Ben Franklin book really, really spoke to me about, here was this guy who made his money. He was an entrepreneur. What did he do? He actually printed money. He caused hyperinflations. That was his job when he was in his 20s. What did he printed for New Jersey and Pennsylvania and Massachusetts? He was actually the best chess player in the colonies at the time. But, really wonderful biography. Probably Hamilton, is something everyone loves. I would have to point at my wife's book, Muppets in Moscow, she had a very incredible career. That was such a piece of history. Actually, speaking of that, another amazing book was by David Landau, who wrote this book, The Poverty of Nations, which was just huge and actually gave the Nobel Prize for people this year who put a little bit of econometrics into it, but it's basically what he did. It's told very eloquently. It's about the importance of institutions, the importance of your history of culture. Historians know how to write in a way that economists don't. I by the way say I tried very hard in my book, maybe inspired by my wife's, to make it more entertaining than the normal economics book. I bring a little of myself into it. I have things I want to say, but I know that they don't get out there if people don't want to read it. And so I really tried, I was somewhat experimental, but tried to put myself out there a little more, bring chess into it, my life into it a little bit more. It's not a memoir, just to try to make it more engaging, because I want people to at least think, they don't have to agree with me, but I want them at least to know what I actually said instead of what somebody said I said. So anyway. And
I've read your book, and I think it's fantastic. And it is definitely more readable than many of the books written by economists. So it was a page. So it was just kind of a page turner for me. I mean, I love markets and the dollar and stuff. So, but it definitely came across your
No, I was inspired a little bit again by how it evolved. I also try in the book to think of things I was wrong, which is painful.
Yeah.
But I talk about the Plaza Accord, how my view changed. I talk about certain aspects of fixed exchange rates, how my view changed. So I think that's important also for someone to think about how economists learn, how they think. And I started out, I think, with chess, about saying I learned these positions, it changed. Somebody says they're never wrong. Paul Krugman's sort of, always right. They're not, you can't listen to that, because they might seem right circa 2025, but it won't necessarily seem right circa 2027. The things change, and you have to be somewhat introspective about yourself and, being open to these changes.
Yeah, that's fantastic. Well, that's a great way to end. One thing I would do is I'd urge all of our listeners and viewers to buy your book, How a Dollar Your Problem. It should be available in all good sort of platforms and book locations and such. So, with that, thanks a lot, Ken. It's been fantastic.
Thank you for hiring me. I want you to hire me. I need money, but thank you for having me.
Great. Good stuff.
Thanks for listening to the episode. Please subscribe to the podcast show on Apple, Spotify, or wherever you listen to podcasts. Leave a 5-star rating, a nice comment, and let other people know about the show. We'd be super grateful. Finally, sign up for our free newsletter at macrohive.com/free. That's macrohive.com/free. We'll be back soon, so tune in then.